Good morning, traders. It is Wednesday, June 25th. Take a look at the QQQ and where it's trading this morning. We are finally poking to some new nominal new highs, all-time highs for the regular trading hours. So this is going to be fairly significant. Lots of headline news. The Toronto Stock Exchange closed at new all-time highs yesterday as well. You can see here we've dipped into these oversold little territories where on a short-term basis, usually where bargain hunters step in and we tend to see the market try and find some support and rally. We did rally off the 20-day moving average. Over the past couple of weeks, we've seen the market trade sideways and consolidate, which is building energy as it's trying to eat through this previous high on the chart. And now it's starting to break free and run higher. So we'll see how all of this unfolds over the next few sessions. Again, we're long the S&P 500, the NASDAQ, we're long Bitcoin with our band strategy, and we'll see if this continues to push higher. Now, there's some interesting angles. Obviously, we called the dead cat bounce on this exhaustion down, talking about how there was that massive wave of panic. We should see a huge gap down, a flush it out, and then see some type of dead cat bounce. We've had a dead cat bounce, and it's turned into a significant rally, and now we're poking to nominal new highs. So technically we could say, okay, well, maybe it's not a dead cat bounce, it's a rally, and now the market is trying to figure out if it is going to hit a nominal new high, suck everybody in. This is what we talked about months and months ago, how the market may want to recover, and if it hits new all-time highs, it's going to get everybody very bullish. The shorts are going to cover. We could get this final blow off, this squeeze even higher as everyone changes gears from being bearish to bullish, and then potentially we see the markets roll over. We've seen this during many major market tops before huge multi-year corrections where the market does push up. So we're starting to see some of that confidence move into the market. A good spot to see this is really the ARK ETF, really since the last trigger that generated when the trend turned up. We've seen the ARK ETF move up fairly significantly, 38%. And this is telling us people are piling into the aggressive stock space. But when we zoom out on the chart, you can see it really is nowhere near the all-time highs. But it is definitely telling us people are getting bullish and they're willing to take on lots of risk. And of course, I hear lots of people talking about how the S&P 500 is going a whole lot higher. And people are just getting really bullish on the markets. Now, overall, in the longer term, looking forward a year from now, I still think we're going to have a massive correction. I think we could be much lower, but we're not going to fight the trend, we're not going to fight the trend and bet on falling prices. We're going to stick with the trend, which is what our strategies do here, which as we can see the QQQ, the market has moved up. It's hit targets. We're about to hit some new all-time highs. We don't want to fight it. We definitely want to avoid volatility, which is what we did. And now we just have to let the market figure out what it is going to do. So expect lots of probably FOMO. I know a lot of people have been betting on the dead cat bounce, expecting a drop. And so they're on the wrong side of the trade. They're trading an opinion and what they think or want to happen versus what is actually happening, which is a uptrend. And that's the difference between traders who are more or less long-term successful. They trade what the charts are showing you. You're trading with the trend, with the money, versus trading against it, saying, oh, it's bearish market news, everything looks terrible, markets are overvalued, we should see a big correction, and they bet on inverse trades. I'm seeing this a lot in the comments. People are betting on this being a dead cat bounce and falling, and they keep getting deeper and deeper into a losing position as the markets push higher. And now when we hit new all-time highs, there are a lot of investors out there, not saying you guys, but a lot of investors who have bet on falling pricing because of an opinion. And really they're going to have to start to cover because they're going to be dead wrong. They're hitting new all-time highs. You do not want to be short the market when it's hitting all-time highs because there is technically no overhead resistance, which means it could keep running until you're broke, more or less. And we don't want to fight that. Let's take a look at where money is flowing today. So it is flowing slightly into stocks. The NASDAQ up the most, 0.4. The rest of the indices are up